A Beginner's Guide to the Stock Market, Demystifying the World of Investing. Introduction. Welcome to the exciting world of the stock market. Investing in stocks can seem intimidating at first, but with the right knowledge and a little patience, you can navigate this financial landscape and potentially grow your wealth. In this comprehensive guide, we'll break down the basics of the stock market, explain key concepts, and provide you with the tools you need to start investing with confidence. Chapter 1. Understanding stocks. What are stocks? Stocks, also known as shares or equities, represent ownership in a company. When you buy stocks, you become a partial owner of the company and have the potential to benefit from its growth and success. How do stocks work? Stocks are bought and sold on stock exchanges like the New York Stock Exchange, NYSE, or NASDAQ. The price of a stock is determined by supply and demand. If more people want to buy a stock than sell it, the price goes up, and vice versa. Stock prices can also be influenced by various factors like company performance, economic conditions, and investor sentiment. Chapter 2. Fundamental Concepts. Market capitalization, market cap, refers to the total value of a company's outstanding shares. It is calculated by multiplying the stock price by the number of shares outstanding. Market cap is often used to categorize companies into different sizes, such as large cap, mid cap, and small cap. Dividends. Some companies distribute a portion of their profits to shareholders in the form of dividends. Dividends are typically paid regularly and can provide a steady income stream to investors. Not all companies pay dividends, especially those in the growth phase that reinvest their profits into expansion. P/E ratio. The price-to-earnings (P/E) ratio is a common valuation metric used to assess a company's stock price relative to its earnings. It is calculated by dividing the stock price by the earnings per share, EPS. A higher P/E ratio may indicate that investors have high expectations for future earnings growth. Chapter 3. Getting started. Setting financial goals. Before investing, it's important to define your financial goals. Are you looking for long-term wealth accumulation, retirement planning, or shorter-term gains? Clearly defining your goals will help you make informed investment decisions. Risk tolerance. Understanding your risk tolerance is crucial. Stocks can be volatile, and their prices can fluctuate significantly in the short term. Assessing your comfort level with potential losses will help you determine your investment strategy. Types of stock market investments. A. Individual stocks. Buying shares of individual companies. Requires research and monitoring of company performance. B. Exchange-traded funds, ETFs. Investment funds that hold a diversified portfolio of stocks. Provide exposure to a specific market or sector. C. Mutual funds. Pools of money collected from multiple investors to invest in a diversified portfolio of stocks managed by professionals. D. Index funds. Passive investment funds that aim to replicate the performance of a specific market index, such as the S&P 500. Chapter 4. Research and Analysis. Fundamental Analysis. Fundamental analysis involves evaluating a company's financial health, including its earnings, revenue growth, debt levels, and competitive position. This analysis helps determine whether a stock is undervalued or overvalued. Technical analysis. Technical analysis involves analyzing stock price patterns, trends, and trading volumes using charts and indicators. It helps identify potential entry and exit points based on historical price movements. Chapter 5. Building a portfolio. Diversification is the practice of spreading your investments across different asset classes, industries, and regions. It helps reduce the risk of losses by avoiding overexposure to any single investment. Dollar cost averaging is an investment strategy where you invest a fixed amount of money at regular intervals, regardless of the stock price. This approach reduces the impact of short-term market fluctuations and allows you to buy more shares when prices are low. Chapter 6. Monitoring and reviewing. Stay informed. Keep up with news, market trends, and company updates that may affect your investments. Utilize financial news sources, stock market websites, and reputable investment research platforms. Regular portfolio review. Periodically review your portfolio to ensure it aligns with your goals and risk tolerance. Consider rebalancing if any asset class becomes too dominant or if your financial circumstances change. Conclusion. Congratulations on completing this beginner's guide to the stock market. Remember, investing in stocks requires patience, research, and continuous learning. Start small, focus on long-term goals, and seek professional advice when needed. With time, you can develop the skills and confidence to navigate the stock market successfully. Happy investing! Please like and subscribe to our YouTube channel.